Hello and welcome to a brand new edition of Home of the Market. I'm Surabhi Upadhyay. We're kickstarting a new week today, and our theme is the one pocket of the market that's buzzing not just today, but it has been one of the best performing areas of the market in the last 1 year. I am talking about defense stocks. Now, you know that the real agenda this week is going to be geopolitics, with Prime Minister Modi heading to the United States, and we are expecting some high-profile deals to be signed. So to make sense of this opportunity, how to look at it from a stock market perspective, and how to understand what's happening on the ground, we have with us Dipan Mehta of Elixir Equities, and also my colleague Parikshit Luthra, who has been looking at this space and all the geopolitics and the strategic dialogues that are going on around this very high-profile visit. Thank you, gentlemen, very much for being with us. Dipan, first things first, quick short question, then we'll get the context with Parikshit. The stocks that we're talking about, they've gone up 200%, 300% in the last 1 year. So my first basic question is there still any sense in looking at defense, or is this, has this story more or less, the large part of it already played out?
Yeah, good afternoon, Surabhi, and thank you for having me on your show. See, I think some part of the story has played out, and from deep discount, which was there maybe 2-3 years ago, we have seen at least the price to earnings multiples and valuations come to reasonable levels. But considering the earnings momentum, and mind you, they're sitting on huge order book position, and that order book also is ramping up gradually on account of higher and higher orders. So keeping in mind earning visibility and the fact that operating leverages also will come into play, and the steady state, long-term steady state business model of these companies, I would say that yes, I think these stocks have some more way to move up also. And let's look at these levels or slightly lower if they want a nice outperformance as compared to the benchmarks.
Okay, absolutely. Parikshit, let's straight away come to you, because we know that this whole defense indigenization program, this is something that the market really latched onto about a year and a half back. So are we expecting more of the same as Prime Minister Modi touches down in New York on, I think Tuesday or Wednesday thereabouts? And do tell us more about this very high profile GE-HAL deal that you've been tracking.
Well, let's begin with a macro outlook. You're right, there has been a pivot towards indigenization in a great way over the last 3 to 4 years. Why? One, because we have constant tensions with Pakistan and tensions with China as well ever since the Galwan clashes in 2020. So over 2 years, the border build-up on both sides of the LAC has been at very heightened levels, and that has really driven home the point that we need our Atmanirbharta in defense. We need our defense preparedness, procurement, production to be at the highest level, considering the tensions that we face with Pakistan and China. So how is that seeping down to the defense industry? There have been at least 3 to 4 defense indigenization lists that the Defense Ministry has come out with. Products, components that India wants manufactured in India. We want the Indian defense industry to get a leg up, have greater exports abroad as well. We are, yes, procuring equipment from our traditional partner, that is Russia, and a majority of our defense equipment continues to be of defense nature, but we are seeing a pivot towards the United States as well. Why is this particular visit important? Well, it's not just about the GE-HAL deal, Surabhi, which you and I can discuss in a bit, but along with that, we're going to be signing a defense industrial roadmap, which will pave the way for closer integration of industries between the two countries and supply chains. When we speak about supply chains, we are also talking right now about a security of supply agreement and a reciprocal defense procurement agreement, which means that tomorrow, if there is a particular component of a weapon system or a part that we need from the United States, we can get it very easily. There is no long waiting period. There are no regulatory hurdles or government hurdles or red tapeism that is stuck somewhere. It will be a clear agreement which will pave the way for us getting any kind of component or part when we need it as per our necessity. So what this visit is really aimed towards is really making sure that the industries of the two countries come together very easily. What the Indian ambassador to the United States, Taranjeet Sandhu, told us that this visit will really pave the way for integrating India into the global defense manufacturing, production, supply chain. And that's where the opportunity for Indian MSMEs, the big Indian defense manufacturers, lies in the years to come.
No, absolutely. I think you put it together so beautifully, and the market's taken cognizance of this. The market, every time this, this product list comes out, the indigenization list, we see a huge run, a quick flare up in stock prices, but it's become very consistent. And the market's also taking a different view of the PSUs now. I mean, HAL is up 100% in the last 1 year. The others like Bharat Electronics as well. So, I mean, I think the market is expecting more efficiencies even from the PSUs. Speaking of which, do tell us a little more about this GE-HAL deal on engines, how it will be unique. I think this is the big one, the big announcement that everyone's watching out for, right?
Absolutely. This will be the big ticket announcement of Prime Minister's visit to the United States, his first state visit. We had seen an agreement between General Electric and HAL on jet engines way back in 2012. The deal did not take off because the Indian government was not very happy with the level of technology transfer we were getting. Over the years, we've been pushing for 100% technology transfer. When did this deal really gather steam? About 6 to 8 months back. Earlier this year, in the month of February, there was an important meeting between NSA Ajit Doval and NSA Jake Sullivan in the United States, which first gave the nod towards faster work on the GE-HAL jet engine deal. And now we believe this deal has received approval at the highest level, and we're not getting 100% technology transfer, but what has been agreed upon is 80% technology transfer over a 3-year period. How will this happen? Initially, we will get some large parts of the jet engine or multiple assemblies coming in from General Electric, which will be assembled here in India. We will also be buying some manufacturing equipment for a production line for this jet engine. Possibly this line will be set up in Koraput. Within 3 years of signing of the deal, India hopes to add 80% of the value of the engine locally. And this really brings in value for Indian MSMEs because HAL would like to link up its vendors, India's MSMEs, and the Indian government's hope is that in the next 3 years, once this deal is fully operationalized, and for years to come after that, 600 to 700 Indian MSMEs would benefit from the supply chain that would be needed for this jet engine assembly in India. What is this jet engine going to be used for? It will be used for the Tejas Mark II aircraft, which is India's light combat aircraft developed by HAL, our indigenous fighter jet program. It will also be used possibly on other fighter jets that we develop in future. So let's see how the progress goes. According to some experts, it will open up the avenue for exports as well in future.
Sure.
So a win-win deal on both sides. We'll also see a big deal on Reaper drones between General Atomics and India as well.
All right, okay, Pariksha, thank you very much for the context, the background, and sort of the depth, the length, width, and breadth of the association that we're talking about with the US now. Thank you for joining in. Okay, with that, now let's dial back and look at what is the investment approach, or what can be the investment approach when you look at these stocks now. So, Dipan, that's where it gets interesting, right? As Pariksha was giving us the lay of the land, I guess there is no denying that there's a huge amount of opportunity. But where do we even begin when we've seen stocks go up anywhere between 50%, 100% to 400% in the case of some?
Surabhi, I think investors shouldn't get too swayed by the returns these companies have already delivered so far. And when a stock is rallying, it sees no particular high as well. If these are all moving targets, if the corporate earnings keep on moving up 15, 20, 25% or so, then I think stock prices can move in tandem, even if P multiples remain more or less stable. And if you look at the common thread between all the defense PSUs, is a kind of multi-year order book which they are sitting on at this point of time. And that order book, if you notice year on year, the increase in the order book is higher than the actual revenues which they have booked, which means the backlog is looking extremely fantastic for these companies, and there's great deal of earning visibility. And when you have this kind of a volume of business coming to you, automatically operating leverages will start to come into play, and return ratios also start to move up. And that kind of has a very positive impact on price to earnings multiple. So I think that even after these stocks have rallied the way they have, I think they still have some more way to go. But there's a word of caution that these have to be really long-term investment ideas for the investors, and they have to be prepared for lumpiness or volatility in earnings, because end of the day, these are all capital nature of businesses, that of capital goods. and earnings are booked, revenues are booked only when certain deliveries are made or progress is made on completing of a particular project. So it's not like a FMCG business where year on year, quarter on quarter, you can get that 10% type of a increase in profits and revenue. Keep that in mind.
Oh, absolutely. I take that point. In fact, I'm looking at some financials here. One of the notes in the market brokerage called Elara, their projections suggest that profitability will only start increasing. I mean, on some of the companies like Bharat Electronics, BEML, HAL, they're expecting now a PAT CAGR, Dipan, of anywhere between 15% to 25%. So are things really turning? Because I remember 3-4 years back, the big argument against some of these defense PSUs was the lumpiness that you mentioned, that there are these big announcements, but it's not trickling down to the P&L. So is that really meaningfully changing now?
Absolutely, Surbi, and you hit the nail on the head. It's all about execution now. I think we've been talking about Atmanirbharta and manufacturing in India, make in India, and this particular indigenization of the defense sector has been, I think, a decades-long project. But what has changed in the last few years is the actual execution. I think these companies are far better geared than ever before. There is a strong will on the part of the government to ensure that there is self-sufficiency when it comes to technology as well as manufacturing of equipment as well as all the consumables and ammunition as well. And that's percolating down to the defense companies. A lot of the private sector players also have been involved in India's defense indigenization program. And on the whole, I think this entire ecosystem is developing really well, and it will have very, very positive effects on India's status on the global stage and our ability to manage geopolitical events, as well as overall, I think from a security point of view, I think this is a much needed program. Several previous governments have been focusing on indigenization of defense. We had this defense offset policy for many years. Even the previous government had it. But what has changed is the actual implementation of these policies in true earnest.
Okay. So let's get down to the specifics now. And this is the hard part, Dipan. Which stocks would you pick where you still have comfortable in, comfortable in terms of valuations? And when you see a good runway ahead, what are your favorites and why?
So we first a disclosure, we and our clients may be invested, but we were talking about the GE-HAL deal. I think amongst all the PSUs, Hindustan Aeronautics remains our top pick over there. I know it's slightly on the expensive side, but the business is such that it's kind of a monopoly. And this is something where I think maximum investments are required. I suspect that India may be lagging in terms of manufacturing our own aircrafts, fighter jets, as well as helicopters, and that's where HAL comes in. Also, they have a huge opportunity when it comes to consumables, repairs, and maintenance as well. So from that point of view, very positive on HAL. The second kind of block of defense companies which we are positive on are these shipbuilders like Mazgaon Docks, Cochin Refinery, Cochin Shipyard, and Garden Reach. And the interesting thing about all these three companies is they got multi-year order book positions for manufacturing warships or submarines. And then they also have the repairs and maintenance division within these companies. And on the whole, I think with the kind of spending which the government is doing on the naval side, these companies have no problem when it comes to business over the next, I would say, 5-10 years or so. But these are long gestation, production projects. And again, as I said, I would like to reiterate that there could be volatility in earnings depending on the percentage of completion of building of these warships or submarines. But valuations are reasonable over there. And in a way, I think if you want to get some amount of defensiveness in your portfolio, then defense stocks are definitely a good opportunity.
Okay, there we go. So plenty of opportunities. Don't get sort of perturbed by these humongous stock price increases that we've already seen. There could be more upside ahead. That is the view coming in from Dipan. Dipan, thank you very much for joining in. Of course, we take all your caveats on board as well, and the disclaimers apply that Dipan and his clients could have some positions in these stocks that we've discussed. But with that, we are out of time. Hopefully, you found this interaction insightful, and you can do your own homework and look at the great defense opportunity that perhaps lies ahead. Thank you for tuning in. We will see you with another theme tomorrow.